Hey all, welcome to ShareTreck. It's 19th of May 2022. Been a rainy day so far this morning. Probably this long weekend for us is going to be a washout. It's going to be rains throughout. And the market doesn't look any better either. So let's get over it very quickly. Let's get started with our daily update. Let's start off with today's headlines. The first headline I have for you is that the market suspects consumer confidence is weak. And that's the reason why we had a huge fall yesterday. And by the looks of it, the futures are also looking red. So there's likely to be a little more red to go. But I think that when we look at S&P 500, we should find that S&P has probably got into the bear market. And that could indicate to us that potentially we might turn around. And also there is a statistics out there which shows that bear markets rarely last more than 6 weeks. We are coming close to the end of 7th week of bear market for Nasdaq. So there is a good chance that there's a turnaround possible by the end of this week. This Friday is going to be a bit fraught because we got options expiry and all. It makes it very funky to estimate what's going to happen. At the same time, I think under these circumstances, investors are likely to be risk averse and they wouldn't like to carry positions during the weekend. So the mix of all these forces is going to throw up something that's very difficult to estimate right now. But I'm very hopeful for the following week. This week potentially is a write-off. And once we start seeing up and down movement within a range-bound movement, we can assume that some kind of consolidation sideways, downwards or upwards is happening. And once we have those ranges, then we can start swing trading somewhere in between. That should probably be our strategy going forward. I'm going to work towards bringing you more information on that. Having said that, inflation in UK has touched 9%, and in Canada it has touched 6.8%. These are respective highs, and it's also adding to the fear that the economy is not going to perform very well going forward, because there's going to be a lot of demand destruction, and therefore we are likely to get into a recession situation. But things are bleak elsewhere also, like in Sri Lanka, the turmoil is turning really bad. They need aid urgently. They have already a few of the, I think, MPs have been killed by mob violence. The house of the leaders have been burnt. So it's looking very crazy out there. And one of the video clips I saw, there was a pastor who was very agitated. And he was saying people are going by with just one meal a day. This is terrible. So they don't have money for buying gas. They don't have money to get food. And their experiment for doing 100% organic agriculture project in the country has spectacularly backfired in the wrong time, with food inflation worldwide, gas inflation worldwide, oil being so expensive. So they got around 135 million from the IMF with strings attached, of course. India is sending a shipload of food and gas for them. But the country needs to get out of this situation as soon as possible, because they are likely to get into stagflation out there. And that doesn't bode well. There are around 66 countries in the situation like Sri Lanka just waiting to tip over, according to IMF stats. So they're all smaller countries, but it all adds up for the global community overall, because this is all going to lead to economic refugees. It's all going to lead to need to send food and other material across to those places. So it's going to be difficult for the global community. Balance of risk remain intact as they had been for the last 5 months. Something has got to give. So in the last 5 months, we have been talking about a set of risks, big ones, which are continuing to persist. Russia-Ukraine crisis is still going on, and there seems to be no end to it. The oil price is continuing to stay elevated, even though it has dropped in the recent weeks. Then we have interest rates going up because labor shortage is still there, and there is a supply chain issue which is still ongoing. The China COVID lockdown, it's not yet gone. So most of those things that we spoke about earlier are still there. And under these circumstances, it will be very foolish to assume that there's going to be a reversal anytime soon. So some of these risks have to give up and we have to go to the next level of consolidation. So right now, what I'm looking at in the market is some signs of consolidation so that we can assume that the bottom has been reached. So that's what I have for you. And the jobless claims and Philly Fed manufacturing index data will arrive this morning at around 8:30. It's 8:33 a.m. as I'm recording. So obviously, I'm not going to be able to get that data into my report today. But that data is also going to feed into what is going to happen for the day today. With that said, I would like to also mention that oil is expected to drop over concerns of weak economic growth, and as the GDP shrinks and manufacturing activity shrinks, there will be less demand for oil for both production and transportation. And as job numbers fall, there will be less demand for gasoline also, with people will curb their traveling. So overall, oil is expected to start tracking down because it's probably reached as much as it could. So we should start seeing oil drop. At least that's the consensus in the street at this point of time. And that will be good for the Nasdaq because it will put a dent on inflation on its way down. In terms of fear index, fear and greed index, we have dropped from 12 to 9, which is extreme fear. And this indicates that there's going to be a lot of volatility in the market. And potentially with extreme fear, we are most likely to come very close to the bottom of the market. How much more fear can go? Maybe it can tend all the way down to zero. We'll have to wait and see what happens before we get any clear indication of where the market is going. And I have for you this particular chart, which is talking about the US Treasury yields. And you can see that the US 2-year yield has dropped to 2.632. And you can also see that the 10-year has dropped to 2.839, whereas the 5-year has dropped to 2.849. So we are moving in the right direction. We have to move down further for any boost in the stock market sentiments. So there needs to be more of this moving down. And then we'll start seeing some signs of consolidation or of having hit the bottom. With that said, now let's move to look at Nasdaq, VIX, and all our glorious indicators and see what they foretell for us. Hopefully, it's something more motivating and positive than whatever we have seen so far, and then this gloomy weather out here. As always, I'm going to start with the futures, and I'm also going to move myself to this corner of the screen so that I don't block your view. And I would like to increase this a little bit so that we can see what is happening in the live market. So first, I would like to start with our futures. Futures are negative 1.14%. That's around 136 basis points. That's a strong negative. So the futures are bearish. Let's go to the indicators and start looking at oil. As predicted by the street expectation, oil has fallen down. It has come back into the pennant, which is a positive sign. Right now, the 20-day exponential moving average is giving a support, which is being tested. But the MACD, though bullish, is moving towards the signal line and momentum is falling steeply. So further loss in oil price can be expected, and that's a positive for Nasdaq. So we have one bearish sign and one bullish sign out here. However, because we are still within this pennant and because we are at an elevated level, the impact that this is going to have on Nasdaq is going to be marginal, because as long as we are in a pennant on a raising trend, it always indicates that the breakout from the pennant is always going to be bullish and upward. So we have to get out of this pennant and we have to fall below this diagonal line of support out here, and only then can we see positive gains in Nasdaq reciprocating the drop in oil prices. So that's how I would look at this. And then if I was to look at put call ratio, it's firmly in the bearish camp with 1.19 being the reading right now. Anything above 1 is bearish and stuff below 1 is bullish. So PCC is also giving us a bearish sign. So we have PCC giving a bearish sign. We have the futures giving a bearish sign. Let us look at VIX, what's happening with VIX. So this particular candle out here, green candle, is for 19th of May, that is today. And we can see that we are above the line of support and we are at 32.17, tracking our way towards 33.77. So the VIX is looking a bit dangerous out here because the momentum is above average and picking up, and MACD is moving towards the signal line in a bullish manner, even though it is bearish right now. So VIX is also giving us a bearish outlook for Nasdaq. So the factors so far is far outweighing the bullishness and is in favor of bearish outcome for the market today. With that said, let us look at the US dollar index. US dollar index has fallen. This is a really good sign. We have fallen below 12,745. So I'm going to mark this as a resistance. And we still have support at 12,720, which is this green line. And also the 20-day exponential moving average, which sits at 12,712. So between these two supports, I suspect that US dollar index is going to consolidate. So if you look at the last 3 days, 3 business days, we have been consolidating sideways. And today's candle has cancelled yesterday's green candle. And yesterday's green candle was still within the red candle the day before. So we have not moved much here. So I don't expect this to give much comfort to our Nasdaq today. So even US dollar index, in my opinion, is pointing bearish. Let us look at the 10-year yields. As we saw in the previous chart, it has come down. This is supposed to be bullish for the market. If this continues, I would see some positive impact coming on Nasdaq on select shares, which are dividend-paying shares and which have got good cash balances. And if we were to look at QQQ and see what it is doing, you can see that QQQ is down 1.33% in pre-market trading. So QQQ is also indicating pre-market that there is a very bearish overtone. Let us look at S&P 500. S&P 500 pre-market is down 1.2%. So it's also indicating a bearishness. And as of yesterday, the MACD has started moving back again away from the signal line in a bearish manner. And the momentum has also fallen sharply. So it's not looking good. Now, when it comes to S&P 500, I would like to scroll back. I would like to use my measurement tool and see how much we have dropped from the peak. And today we happen to be in the pre-market session at 387.31. So I would go to 387.31. So we have dropped 19.34%. I'm just waiting for this to go to 20% because my theory is that once Apple falls down below 20% and S&P 500 falls below 20% and gets into the bearish territory, that's when there would be a seller fatigue. That's when there will be a capitulation, and that's when we'll have a turnaround back. So let's test the theory. Hopefully today we fall below the support of 389.67, and that takes us into the 20% range, and maybe the following week we can start recovering. So that's what I'm hoping for with the S&P 500 for today. It's a bit perverse that I'm expecting it to fall, but the hope is that once it falls below 20, we're going to go back up again. So that's about what I have here. With that said, let's go and have a quick look at crypto and gold and see what they are telling us. So I'd like to start off with gold. Gold has gone up sharply, and the fall in US Treasury has been absorbed by, the fall in US dollar index has been absorbed by gold. As you can see, gold has jumped 1.27%, which is the smartest jump it has had in a while. So that indicates that we have some kind of a floor out here for gold. Going to draw a trend line out here, linking these two lines. There's been a bit of a floor out here for gold, and we have gone above this, and we have gone above the 9-day exponential moving average. The next target is the 20-day exponential moving average at 1,860.22. And our MACD is also turning bullish. It's bearish right now, and the momentum is picking up sharply. So gold is indicating that it has absorbed money coming in, funds coming in from the gold index. And we have to look at Bitcoin. Bitcoin is positive. It's found a floor at around 28,993. But Bitcoin would take its cues from Nasdaq, and I don't see any decoupling happening right now. So I would expect that if Nasdaq goes down, Bitcoin is likely to fall down after market open. That's my opinion, and I would stick with that. Let's start with looking at CRISPR Therapeutics, and just like we predicted yesterday, CRISPR Therapeutics ended positive. And given the bearishness in the market, there is a good chance that many people might forget why CRISPR became positive yesterday, the potential chance of it being taken over. Now, those memories will keep on coming and going in the market's consciousness, depending on all the other noises that are happening around. So today, I think CRISPR might take a bit of a breather, but it won't lose as much as the other shares. And there's also a good chance that at the end of the day, we might see slight bit of positive movement in the market because we have been beaten down significantly. And we have almost, I think, 7 weeks of red candles in Nasdaq. So something has to give, because the maximum, typically 90% of the times, you have 6 consecutive weeks of negative in Nasdaq, and then things turn around. But this time we have come to 7 weeks, so which is a very rare occurrence. So either things are going to break down severely, or they will turn around from here. This week is going to give us the judgment. And I think Friday is going to be a cliffhanger, because all options expiry and everything will happen. And at the same time, people will be deciding whether they want to carry risk over the weekend. And if they decided not to carry risk over the weekend, we can see a lot of red out there. So we have to look for range-bound movements. I'm looking for some consolidation pattern to form. I don't see it yet, but there are potential signs that it may happen. So let's watch for that. Let's look at a few other shares. I'm going to look at IDNA, which is the overall indicator for the genomic sector. And you can see that it has beautifully balanced itself, and it is bouncing off this diagonal line of support. And this particular candle is from the 18th, and pre-market there have been no trades. So we don't know how it's going to move. But if this support holds, then that bodes well for genomics. But I'm afraid that the support is likely to not hold, because our momentum is below average and it's pointed downwards. And also our MACD, even though it has turned bullish, it's not moved off significantly from the signal line. So the momentum is going to have the effect of pushing it back down quickly. So I'm thinking that overall it's going to be a red day for genomics, with the potential for turning a bit green at the end of the day for select stocks like CRISPR and maybe Novartis or Vertex. So that's my prediction for today. With that, I would like to end this session. And if you like this video, please don't forget to put a like there so that our channel can be seen and discovered by more viewers. And if you have not yet subscribed, please subscribe and join our community for everything related to CRISPR and the stock market. And I'd like to see you tomorrow. Bye for now.